Welcome to Markets Now. I'm Michelle Rook along with Scott Barlick with Kooima Barlick. We had a lower start pretty much to everything, but we're coming back in the livestock. We've seen a little two-sided trade there, but still some pressure over in the grains, and it feels like a risk-off day today in the grain sector, Scott. But, how much of that is just some consolidation as we got up into the upper end of these trading ranges?
I think that has a lot to do with it. And thanks for having me, by the way. But we've got some grain markets in a time of year where there's not, I wouldn't say a heavy amount of news trying to shift a trend here. And we climb to the top side of the ranges and we find ourselves a little bit overbought in the corn, soybeans, wheat. Well, we're overbought. We've got a 3-day weekend coming up and we don't have a big trend changing news that's going to say, hey, we got to break out of the top side. So I think those overbought conditions, you're just kind of weighing into the market here and finding a way saying, hey, top side of the range, you've got plenty of traders probably trading in that range and they always get pretty comfortable as that works. It's always a be careful when it does break out of one side of the range, whether it's top side or bottom side. Things can happen fairly quickly. So don't let it lull you to sleep here that we're just pretty comfortable here. When it gets everybody a little too comfortable, that's usually when it can jack some people up and take a swift move in a direction. But I think it's, as of now, sitting in the middle of February, we're not going to have any major news for us to talk about here until we get acreage March 31. Still arm wrestling with what's going on in South America. How much weather do we got to pump in? You've got harvest pressure on beans in Brazil. You can read that this morning. And then you can also read some corn planting issues in Brazil as well. And you kind of shake your head like, okay, what time of year are we getting down there? How does double cropping? How do you pencil that in? So always trying to digest what's happening down there is always hard. So I think I'm just leaning on that they're going to have a pretty good sized crop and they are going to be in the market. China is very interested in making a lot of business with South America this year.
So the only thing that concerns me, Scott, is the fact that soybean meal is down now again today for the second day. Did we put a top in the meal market? We're back under the $500 mark. And if so, can soybeans keep going up? And it looked like corn was trying to follow as well.
Yeah, soybeans to me are going to have a little bit of tougher time to try to get through the top side of the range as we do get some of these South American crops are going to be able to be on the market. Our dollar's still at a lot stronger level than what it was when we were having all of our hot demand here a year ago and beyond that. So to me, it's a little bit of a struggle, and you see soybean meal get to those kind of prices. One indicator I'll look at, okay, I got $17 milk, $17.75. That's probably not keeping the dairy industry really interested in really pumping in some soybean meal. So you'll start to ration the demand when you get to some of those levels, start pulling it out of the diets. And that happens very quickly, how fluid they can change those diets. And then you look at a hog market that had a significant break. So I think it's going to curb some demand. Soybean meal needs a little bit of a correction here yet. And beans are probably going to follow, in my opinion, to the downside.
So cattle market, live cattle have been consolidating here kind of under the contract highs from Monday, and we're still waiting for cash trade to break. It's been kind of quiet here. What's your thoughts on cash? Can we make it another higher week? And then the futures, does that pull them along or not?
Yes, I think we can get some higher cash moving forward. Our seasonal cash high can be the third week in March. And we're all talking about how tight the numbers are. Yep, we're there. I think the tighter numbers are yet to come. But for the upfront here, you can notice the last couple of weeks, the cash trade isn't really shaking loose until after the Friday market. So it's late in the week when cash is happening. So I think the producers have some leverage here, the ability to ask some higher prices. And after, you do that for 2 weeks in a row, you throw some higher prices out on a Friday. Producers aren't very interested in selling on a Tuesday the next week because they're going to say, hey, I want to wait for that higher price later in the week. So we're kind of standing our ground. I think we can pluck away at some higher cash, as I think there's some of these suppliers that are really trying to stock up on some meat for this spring rally time frame for that peak demand. Hearing that some of those outfits between the packer and the retailer, they all are also looking at the same supply numbers we are. So trying to stock up on some of that in preparation for that. So I think the interest is going to stay on from the packers. They're wanting the cattle. The demand has been good. Yep, it's not the peak that it was, but I think it's still in very excellent condition, and consumers still want some high quality beef, and that's going to hold on strong. So I'm really liking what I hear. I think we can pluck away a couple dollars a week here, maybe over the next couple of weeks, and futures should want to react to that.
The thing that's really impressive, negotiated totals on cash cattle last week, over 108,000 head. And usually the first part of the month is when the packers kind of pull from their formula cattle. And so that was even more impressive to me.
Yeah, that's excellent that we have more negotiated trade. That's always very good for the market. And you have a northern sector that is geared up and trying to feed for this spring rally. When you see some of these northern feed yards are actually pretty filled up in some different spots, and some of the typical yards that I would feed at, a little bit full at the moment here, which kind of surprises you with how tight some of these numbers are. But you do hear how tight the South is. They're pulled back. So we market more cattle in the first quarter in the north than we do in the fourth quarter. So it doesn't surprise me that the negotiated trade country has a few more cattle in the upfront here. Things are going to continue to stay tight through the summer, but we're going to have a little bit probably continued boosted trade here going forward. And as you and I had talked previous, that you're going to start to hear a lot of different dangled carrots, looking for some March delivery, looking for some May delivery, some June, different time frame. Packers going to be very interested in trying to lock up some of that supply further out. So we'll start to hear a lot more of those kind of offers, whether it's, par for April board for March delivery. I've heard some of that. Still hearing a lot of producers passing some of those. There's some takers for sure too, but still I think there's a lot of confidence behind the producers and wanting some higher prices.
Yeah, and it sounds like everybody's pretty current, and weights dropped, what I think Brad said, 21 pounds last week. So that really adds to that. So let's talk about this hog market. It looks like the lean hog index is bottomed. It looked like we got a little push here from the ASF concerns. But how far can you extend this now that April's the front month at such a big premium?
Yeah, that seems to be a little bit of a struggle. You got the funds to maybe blink a little bit when it got through some of their targets. The number we were looking at was 84.90, and then when it blew through that, you saw a significant change in the board. So putting some pressure on those heavy shorts there. But yeah, significant premium. And usually the premiums are there for a reason. We are expecting to come into a little bit of a tighter supply when the numbers are going to be less. We're looking like we have the weights under control at the minute, continuing to decrease on the weights. So feeling good there. Supply should get a little tighter, but when we get ahead of ourselves, if that index doesn't start to shift, that's what's gonna rein this rally in. So the ASF probably boosted some of the correction, and we're due for a correction regardless, as steep as it had really broke. So that was just something that kind of aided in a little bit of a correction here, because we had been talking about China's supply getting so large and how they were growing, and then suddenly, hey, maybe that's not going to be perfect over there. There is going to be risk. So that kind of offset that story just for the short term. Still could be a little bit of a struggle here for me. If cash doesn't really start to wiggle, we're going to have to probably rein it in a little bit.
All right. Thanks so much. That is Scott Barlick with Kooima Kooima Barlick and Markets Now.